Hello everybody and welcome to lesson 1 on the foundation trading program here at the Academy of Financial Trading. My name is Sean Fitzgerald and tonight I will be taking you through the foundations of your foundation. Now I just want to double check that everyone can hear me. So what I'm going to do is bring up the risk warning, and while you're reading that, if you could just also let me know that the sound is coming through okay by typing yes into the chat box. Let me just see that everything is okay. And of course, we do have to put up the risk warning, as we are all fully aware there is some risk involved in financial trading. But what we plan to do here at the course is mitigate as much of that risk as possible. And most importantly, you do have to remember that without risk, there is no opportunity. We just have to be fully aware of it and learn how to control it. Now, it does look like the sound is going through okay, so let's get straight into it. So before the lesson, I want to get some housekeeping out of the way. So just to let you know, I'm going to spend a little bit of time telling you about the company, telling you about what we're planning to do on this course, what we're going to be going through, before we actually get into the meaty stuff and start actually talking about financial trading. So, the Academy of Financial Trading was the first company on the scene, but we do have a sister company called the Shaw Academy. Now, it is part of the Shaw Education Group. They are together. There is commonality of ownership. It was founded in 2012. We are the largest live educators on the planet, and we educate over 65,000 people a month live, as we are doing right now with all of you. We do have offices across 3 continents, employing over 200 full-time staff, and there's a diverse range of subjects across 10 different languages. I'm sure some of you have indeed come from the Shaw Academy, and that's how you heard about the Academy of Financial Trading. And for those of you who the Academy of Financial Trading is your first foray into online education, be sure to go over to www.shawacademy.com and have a look at that. Now, talking about this course and financial trading, the truth is achieving results takes hard work. What we aim for here is one simple thing. It's to make money, and that is to make money through consistent, conservative growth. We're not going to make any false promises about yachts and mansions and retiring to the Bahamas and becoming a millionaire overnight. Again, it's about consistent, conservative growth. We're here to give you a foundation in financial trading. So this is aimed at beginners. It's to let you know what you need to know to begin with, and to give you an idea that if you do want to get into trading, what you need to know, what's involved, what it's all about, and, to really give yourself a grounding that you can build upon. We do this through live lessons, including bonus Q&A sessions at the end of every lesson. So we do an hour-long live session where we just teach the materials. There is interaction. You'll notice your chat box there. You can type away and chat. And the guys on the team here, Leon, James, Rory, JP, Sam, and indeed, who am I forgetting? Did I say James? I think I did. They're all sitting out there interacting, doing the lessons and talking to people, answering your questions as they go through it. I myself then will answer all of your questions at the end of the lesson when we do a 15 to 20 minute Q&A. Alright, now trading can be extremely rewarding. We all know that, we've all seen the results, but it does have to be approached in the correct way. You do need a methodology, you need a strategy. What is the method here? Well, first off, we're going to teach you how do the markets function. There's no way we can interact with them and use them if we don't actually know how they work. We'll be doing this through teaching you. I'm not going to go use any technical jargon or any terms without defining them first. In fact, lesson 2 is explaining a lot of the jargon, because obviously, like any business, there's a lot of jargon being used by the people involved. So we want you to know all of that so that you can talk along with all the experts as well. You understand what they're saying when they talk about it. There will, of course, be the interaction that I just talked about. And that is one of the bases of our course, and why you will benefit so much is through the interaction, being able to chat and talk to people. Then we'll be going through the different chapters. You can see this layout in your student area. I'm pretty sure you're all aware of that already. And our primary focus through all of these things is to give you a trading edge. to make sure you have that little bit of an edge. Okay, so what we're going to do is we're going to be looking at this. Now, I just want to get a quick yes or no. Has anybody seen one of these before? Okay, now, what I really want to point out straight away is if you haven't, do not be worried at all. That is absolutely zero cause for alarm. My assumption here and how I'm going to be teaching this course is that people have zero experience in trading, that you don't even know what financial trading is, that somebody else bought you this course as a present because they thought you might enjoy it because I'm so charming and fun to listen to, but that you have zero experience. So I'm going to be teaching you absolutely from everything from the ground up. But it is nice to see that some people have seen it. So obviously, having seen some of these things in the past, some of these things will be familiar to you. But what I would say is don't worry, even if these things are familiar to you, at the start it might seem very simple, but we have to get the grounding. We have to make sure everyone starts from the same point, and we will ramp up quite quickly. Now this is called a candlestick chart, and you can see up here kind of high points, and you can see over to the right with the price reflecting that high point, and at the bottom from that point you'll see the date as which it was at that point. You'll see where it is currently marked with the black box. That's all the way to the right. And what we're going to be looking for is things like this, trends, where we can see a floor that things are bouncing off, be it a floor or a ceiling. And we'll be using this to give us certain price points that we will then use to make decisions. Now, this is not anything you need to understand right now. I'm just giving you an idea of this is what you can expect to understand when you are finished the course. You'll be able to look at this and you will be able to tell me a lot of things about it. In fact, even by the end of tonight's lesson, there will be one or two things you can tell me from this chart straight away. And as we go further and further into the course, you will be able to tell more and more. So we're obviously on lesson 1 right now, market basics. Lesson 2 will be the mechanics of trading. Lesson 3 will be a pre-recorded lesson. So that will be added to your student area. It will be pre-recorded, so that will be one of the lessons that isn't live. Okay, so just to be aware of that. Then in week 2, we'll be going through technical analysis. So we'll be talking about candlesticks, which are those little red and green lines you just saw on that chart. And then we'll be talking about technical charting. Then in week 3, it'll be about finding your opportunities. So once you have the technicalities locked down and you understand the terms and what we're looking for, we're going to start building what we call your toolbox, all the different ideas and strategies that you're going to be using. And then we'll be going into simulated trading and charting software. So actually giving you a demo and a demonstration of the software that you're going to be using to trade. And then lesson 8, incredibly important, since this is where the strategy will start kicking in. This is where you're going to be learning to become a counter retail trader. So this is where we're going to take everything from the 7 previous lessons and show you what type of trader you're going to want to become. Then in week 4, when you have that under wraps, we're actually going to start refining what type of trader you're going to become. And you're going to learn that through risk management. Like we said at the start of the lesson, we all know risk is here. Could we make any money on these markets if there wasn't risk involved? Of course not. Risk is what gives us the opportunity. But managing that risk is what makes us different, is what makes money for a good trader. And then lesson 10, application. So obviously taking everything, we've taught you about all these tools, then how to apply them. It's the same as if you were teaching a carpenter how to use a saw and how to use a hammer and what nails are for and what wood is. You could teach them each thing separately and that would be fantastic. But then at the end, you have to show him how to saw the wood and then how to use the hammer on the nails to put the wood together. He has to learn the application of these tools that he's been shown and given. So the objectives on this course are very simple. Like I said, everyone has to start somewhere. Even doctors or surgeons who are opening up people, a brain surgeon who's going into a brain neurosurgery, even they have to start off with, what is the difference between a knee and an elbow? Where is your foot in relation to your hand? You have to start off with the basics. And for the people who are experienced, obviously the basics are still going to add value. It'll give you a bit of a refresher. It'll teach you a unique viewpoint, which focuses on counter retail trading, which is our strategy. And we might highlight some things that you hadn't thought about before. So we're going to help you again, as I always say, make consistent, conservative long-term growth. There is only one aim here, and that is to make money. We're not here to look cool. We're not here to be flash. We're not here to tell people that we're cool stock traders or make $1 million overnight. We're looking to make money, and we're looking to do it consistently, and we're going to do that with conservative long-term growth. Now, most of you have already figured it out, but there is a chat box that you can chat to us in. I can see some of you are typing in it already, people asking questions. You can hide it with the little orange arrow, and you just enter the questions, and like I said, the lads sitting outside listening to the webinar, and they see your questions come up, they will happily interact with you and answer you. If I ask you a question, you put it in the same chat box. At the end in the bonus Q&A, in the same chat box. Everything just goes into one chat box. Now you will also notice that you're all muted, and some people asking, how do I unmute myself? I'm sorry, you do not unmute yourself. I am going to be the one talking, and obviously if we had everybody unmuted and everybody shouting back and forth, it would be very difficult to get through the lesson in the hour we have assigned to it. So for any questions, we obviously want to help. Just type in the questions and one of the guys will get through to you. And at the end, we do have the bonus Q&A. But already one of the biggest questions is, how do I access the recordings? Well, it's very simple. You go to academyft.com. The website might look different depending on where in the world you are, and you simply click on the sign in button in the top right. You enter your username and password, your username obviously being the email address you were assigned. And if you've forgotten your password, simply click the forgot password link, and don't forget to check your email, spam or junk folder just in case it went in there by accident. That'll take you into your student area where you'll see at the top right the orange button that says Start Live Webinar. This is obviously one of the most important buttons for you all the way through the course, since you are going to want to be on every lesson live, as that is how you will benefit the best. And as the recordings are added, as each one becomes available, within 24 hours of every lesson, we will be making the recording of that lesson available, and you will be able to come on and watch it in your own time. Like I said, within 24 hours of the class coming to an end, you will find it in there and you simply click on it. Now, I've already said live is by far the best way to get benefits from the class, but we do have a little bit of a competition to make it a little bit more fun and a little bit more incentive to attend live. So we do believe that passive learning is not as effective as live interactive. So even though we do run a competition, I genuinely believe, guys, the interactive live lessons, it's for your benefit. Do you think I would prefer to be sitting in here, 3 times a week talking for an hour, or would I just prefer to make a recording and we just send you the videos for you to watch in your own time? No, we genuinely believe that the live interaction is what makes the difference and what makes it so much more beneficial. So that's why we're really pushing you to come on and do it live. So we reward our most diligent students, so we know it's not easy. So the Shaw Education Group Lifetime Membership. So we'll be doing it during the 8th lesson, which is where you're going to want to be anyway, because it's becoming a counter retailer, one of the most important lessons. But from everybody who has attended live, over 50% of the lessons up to that point, they will be entered in a draw to get a lifetime membership to the Shaw Education Group. What is a lifetime membership? Well, that means you can take any course on either the Academy of Financial Trading website or the Shaw Academy website, any course, foundation, advanced, or any member of your family can take any course for the rest of your life without ever paying a penny. You just get access to every single piece of education we have, be it talking to people in here as a one-to-one interaction for advice or for a consultation or taking the courses or accessing the materials or watching the videos. Absolutely everything scot-free for life, for your family. And all you have to do to get in on that is attend over half the lessons live, as we do keep track of attendance. Now, we do have obviously some topical items which pop up frequently, and it's a convenient way of communicating through Facebook and Twitter. As we go through the course, now at the end I'm going to show you where our main Facebook and Twitter pages are, but as we go through the course, especially in lesson 2, we're going to be starting off with doing some class interaction. So we're going to be interacting with you through Facebook, Twitter. I'm going to show you all the Twitter handles for all the guys on the support team in here, so you can tweet to them, you can talk to them, you can ask them questions. I'll be giving you my own one as well. But for tonight, I'm just going to give you the basic ones because I don't want to overwhelm you too much. So don't get ahead of yourselves, all right? Let's just take things slow and ease into it to begin with. And as we get more excited and start to have more fun, then we'll ramp things up and start throwing things in, adding things on. Now, before I start explaining financial markets, again, just a simple yes-no question to everyone out there. Can I ask who has traded before? Just a simple yes or no. And once again, if you're typing no, that's a good thing. I don't want you to be worried and concerned, oh my God, I'm surrounded by traders. You're not. I would actually say 95% of the people coming through are saying no. So that is absolutely no harm. Again, that's exactly who I'm aiming for. There are some yeses. So brilliant that some of you have tried. Excellent. You have a little bit of idea of what we're getting into and what we're going to be doing. But to all those people that said no, can I ask you another question? Just a follow-up question to your no. So all the yeses, you can ignore this question. All the no's. Have you ever been to a fruit market or an auction? Have you ever gone to a shop or a stall that is run by an independent business owner? Well, in that case, you probably have traded. You know, you've gone up to a stall and you've seen something and you've valued it. You've said, okay, well, that is worth roughly X. I will give you roughly X. What if you went to a strawberry market on Sunday? You know, you've had a long week of trading. The market's closed. You relaxed on Saturday. Sunday, you went out. You decided you wanted to get some strawberries. You walk to the fruit market and somebody has strawberries, and we'll use that price tag there, and there's no decimal point. He wants $200 per strawberry. Just one strawberry, no packaging, no life-saving medicine, no bar of gold. He just wants $200 for each strawberry. What would you say to him? Would you be buying strawberries off this gentleman? Okay, I can see most people saying no. I don't think there's any yeses. Some people using some quite profane language with how they would treat this person. All right, well, why not? Why would you not give this person $200 for a strawberry? Are you a strawberry expert? Do you know exactly how many strawberries are on the market right now? Do you know what the supply and demand of the strawberries are? Do you know how much a strawberry will benefit you right now? Do you know how much work he had to put in? No, we don't know that much, but we still know that $200 per strawberry is just too much. We know the value of a strawberry is not $200, so it is definitely overpriced. So you may not have traded on the markets before, but you have done some trading, you have had some experience. So what we're going to do is we're going to take these real life examples, these real world experiences, and we're going to show you how you can translate them into the financial markets and becoming a good, strong trader there. All right? All tradable objects are similar. It doesn't matter if you're trading gold, if you're trading corn, if you're trading coffee, if you're trading stocks, if you're trading CFDs, whatever it is you're trading, they're all similar because human beings are trading them, which means there is emotions attached. Prices on a chart are simply a consensus of agreement of value as set by people buying and people selling. And obviously, the effect of conditions around them at the moment have an effect on those prices as well. You just have to view charts as if they were a marketplace like any other product. If you're looking at a chart for corn and you're seeing the pricing going up and down, and you're at the same time looking at a chart for, let's say, Apple stock, do you think you need to know everything there is to know about corn? Do you need to be an IT expert and know exactly what's going on at Apple? Can you name every single board member and know what they're doing tomorrow? Or do you think that you need to know exactly what farmers are buying and selling corn, how much effort they're putting in, who's working on their farms with them? Okay, we don't need to know that stuff. That's not what we're going to be looking at. We're going to be technical traders. But, you guys this isn't what's going to be important. We're going to show you what's important. But the thing to remember here is you have traded before. You have some experience, whether you believe so or not. And the purpose of financial markets, there's a couple of reasons. If I was to ask you, why do you think the financial markets exist? What is the purpose of the financial markets? Why are they out there? Why do they exist? What type of reasons would you say are out there? All right, Dina saying making money. Dana saying to gain more money. Supply and demand is, well, supply and demand is what's happening on there. That's not so much the reason. Economics, Caitlin, again, that's kind of a description of what's happening there rather than the reasoning. Investment to fulfill people's demands is good, yeah. Exchange rate between countries. Again, that's not so much a reason rather than just one of the effects of it. To raise capital, there's a brilliant one, okay? Raising capital is a very good one. Thank you for that, Amanda. Okay, sometimes the transfer of risk. You know, if you're working, not even if you, let's take a real world example. Medical companies out there. If medical companies are developing a drug that they think will help an illness, now they have to spend a lot of time and a lot of money investing in the research and development for this drug. But what if the drug doesn't work? Well, that's a lot of time and money gone that they can't get back. Well, what happens if they, if they get involved in the financial markets and they sell some interest within this product? They're transferring some of the risk because they're recouping some of the money, but with some other people who are investing in it. Now, if the product doesn't go wrong, and it goes well, obviously they will reward those people as well. So those people are taking some of the risk for the potential of some of the reward. It obviously is up to those people to decide what amount of risk is worth what amount of reward, and vice versa. Okay, there's also the reasoning of price discovery. You know, you put things on the market. I think it was Dana said earlier, supply and demand. Well, supply and demand is how you discover the correct pricing. It's the transfer of liquidity, the movement of money. There's international trade. I know some people said stock exchange and different foreign currencies. Again, related, but international trade is a huge one, obviously, as well. Now, online trading gives you the ability to speculate on future price movement. The internet has given us the huge ability to keep track of all of these numbers, all of these markets, live and at the same time at all times. You can do this about 24 hours a day. Sorry, you can do this 24 hours a day from Sunday evening to Friday evening, in that being based in Europe at evening time. Obviously, the markets aren't closed. Are closed at the weekends, but Monday to Friday, depending on time zones, you can pretty much trade 24/7. You can do this from anywhere with an internet connection. So in order to be successful, you just need to know what you are doing. Just because you are able to do something doesn't mean that you should be doing it. You need to know what you're doing. Okay, so who, what, when, where, and how. So in order to trade successfully, you need to know some of the following. Okay, so what is tradable? What can you trade? Well, we're going to be going through this, of course, on the course. I'm going to be telling you everything that is tradable. We need to look at who else is trading. Who else is trading becomes very, very important very, very quickly, as who we are trading against will quite often decide how much money we are making. And, of course, the most important things, when and how to trade. We all know that trading is done over time. It's the movement of prices on the markets over time, instruments going up and down. They're constantly changing, and they're changing rapidly. We've seen how quickly markets can rise and fall. So knowing when to get in and when to get out is incredibly important. And obviously, you can't get in or out if you don't know how to. So, what is tradable? So again, I don't expect you to all know. I don't want anybody, if nobody knows, that is absolutely fine. But if I was to ask you, what type of things can you trade? What type of things can you see on the market? Okay, Mohammed, perfect. Gold, straight in there. Jumana, silver. Stocks, Fatima and Sarah. Yeah, stocks is probably one of the most famous ones. Everybody talks about stocks. Commodities, financial instruments, oil, gas. Forex, great example. Coffee, anything bought with money. To a degree, yeah, maybe. I would have to think about that. But yeah, there's different instrument types. So rather than getting too specific, let's talk about the types. So one of the types is options. So options is to purchase something at a specified date. So it's the right to buy something without actually the obligation to buy it. Now, if I was to ask you, okay, so gold right now is at, I think, roughly around $1,200. If I was to ask you, what will the price of gold be on April 20, thank you very much, Nick, specifying that it's actually 1,256. Perfect. Thank you very much for that, just clarifying a little bit. So if I was to ask you, what price will gold be at on April 22nd, 2018? Would you be able to tell me, could you give me a good price? Well, no, of course not. It's very, very hard to tell. So how can we tell if we were to invest in gold options now versus April 22nd, 2017? Very, very hard to tell. So that is one thing that we do not favor as much. Futures, physical delivery dates, some leverage. Again, very, very hard to tell. So not something that we like that much. Now, what I will say to you is I'm not explaining these here. I'm just giving you a rough idea, talk about them. We will be going in depth into these later. So don't worry if you don't understand what they are right now. All right. Spread betting is an area where gains are tax-free and the broker is a market maker. Now, there is a conceivable conflict of interest. So if I was to ask you, do you think it would be a good idea for you and your stockbroker to have a conflict of interest? The person you have given your money and you trust with your money, would you like to get in an arrangement with him where you both have a conflict of interest? Exactly. The answer is a pretty resounding no. You do not want to be competing against your own stockbroker for your own money. Probably not going to leave you with a lot of money in that situation. Okay, so again, maybe not the area that we want to get too heavily involved in. And then we have CFDs, contracts for difference. This is where you can speculate without actually acquiring. This is where you have large leverage, meaning the possibility for large returns, and it allows you to diversify. It assists with diversification, which means you can have lots of different instruments. You can be working with lots of different markets. Now, large leverage, possibility for large returns. Does that sound something that we would be more interested in, given the previous three were ones that we're maybe not so interested in? Exactly. Of course, we like the idea for the possibility of large returns. So this is one of the areas where we will definitely be looking at. Now, some basic terms. Now, on lesson 2, I'm going to be getting far more in depth on technical terms, but some basic terms that I want you just to be aware of that we're going to be using this evening as we go through the lesson. Okay, so going long, or going long is just simply another term for buying or believing that something will go up. It's speculating that the price will rise. Very, very simple. And exactly, thank you very much, Afnan, bearish and bullish. I will be getting to those terms, but let's just take it one step at a time. But you are 100% correct. Yes. Shorting or going short is speculating that the price will fall or that you are selling. Okay, so you just have to remember that these are just all terms for traders. All right. Then we, of course, have bulls and bears, as Afnan just pointed out. Okay, so bulls attack from below and are forced upwards. So a bullish market or bulling is when it's going up. All right, bears attack from the top, driving down. So that's falling markets. So that's bears are going down. So bull is going up and bear is going down. And now how I like to remember that is, well, obviously now I just remember it because I'm so used to it. But how I started off remembering that, if you can't remember, just remember that you're bearing down on something. If the police car was bearing down on the car they were chasing, or you're bearing down. So bear down. So bear markets are going down. Okay, a person may be said to be a bull if they have a positive outlook for a market, and hence they may be said to be bullish. A bear views an instrument negatively and would prefer selling. We're just never one or the other, but both. When the time is right, we trade all opportunities. Now, do you think it makes a difference if you have earned €100 on a bullish market or if you've earned 100 euros on a bearish market. Would you prefer to earn 100 euros through buying, or would you prefer to earn 100 euros through selling? And I think Nick said it absolutely perfectly. Who cares? We don't care about whether we do it through buying or whether we do it through selling. We don't want to be a bear or a bull. We don't care about being positive or negative. What do we care about? We care about making money, and that's it. So we don't care about bulls or bears. We just care about the opportunities and what we want to find so that we can make money. Like it says, we're never one or the other. We're both. When the time is right, we will trade all opportunities. So what moves prices? I think it was Dana said earlier, she used the term, what is it that moves the prices? Not just the prices on the markets, but prices in general. What decides the price of anything? Exactly. China is a good answer. I like that answer. That's funny. But in real life, it's supply and demand. If we were to use an economic term, dynamics are the main movers of price. Okay. When supply and demand meet is where you have price equilibrium. Now, price equilibrium is, something that you hear about, you read about, but how often is it something that you actually see on the markets where something settles at a single price and just stays there? How many market graphs have you seen that are just a straight line across, perfectly level with no movement up or down at all? As Nadia put it, exactly, never. It doesn't happen. Prices are always going up and down. The supply and demand is always changing, Once people get something that they want, well, then they no longer demand it, so the demand has gone down. When people are supplying, they no longer have what they were supplying, so supply has gone down. There's also the outside influences. There's contributing factors that can shift. The amount of people that want something. Weather can affect things such as crops. Political instability can affect things such as oil. Agreements between countries can change things such as foreign exchange. So there are outside influences that can constantly change things. We know that scarcity, if there's less of something, that will raise a price. And also over demand will raise pricing. And on the opposite end is also true. If there's a lot of something, then it will obviously lower the price. Or if there's not a huge amount of demand for it, also the price goes down. So supply and demand is quite easy. It's something that we are all going to be keeping a track of. Now, technical analysts don't measure supply and demand past, present, or future because it's just too difficult to measure accurately. There's too much going on. So we'll focus on other things because there are just too many variables affecting it. So you could spend 2 or 3 days analyzing absolutely every single thing that could have an effect on the price of corn to try and make a decision. But it's a lot of time spent for maybe not a huge amount of reward. So we're going to be looking at other ways to find. We're going to be looking at technical analysts trade from the price action. This reflects supply and demand seen through the commitment of participants who are trading and thus affecting the price. So we're going to be looking at people who are actually at that moment affecting the price in real time. So this also reduces subjective biases. Okay, so the accepted price reflects supply and demand changes, and it allows us to apply techniques for trading based on price action. It reduces randomness from trading and allows us to measure performance. So what I would say to you is I've said a lot of technical things there, but what you basically need to know is this is all stuff we're going to be going through. Supply and demand is an economic factor that affects the pricing of something, but it's not what we're going to be using solely to track or make our decisions. So once you can trade consistently, you will then know whether your techniques generate profits and are likely to continue doing so. So I don't want you to get too hung up on this supply and demand. It was just, an economic principle that you do need to be aware of, and it's something we're going to be talking about. But don't worry if you don't understand it fully right now, as each of these techniques and topics that I talk about, that we're going to be getting very in-depth in a future lesson, sorry. So, obviously currencies. Everybody is aware of the foreign exchange markets. We're all aware in the news when you see the price of euro versus yen versus dollar all versus each other. And currencies are, they're considered a bit of a safe haven that have a good return on investment. Why is that? Why do you think that they are considered, these things, a safe haven or a good return on investment? Okay, to a degree, yeah, well, yeah, Saket, liquidity, obviously that is one very, very strong point. 24-hour markets, yeah, again, a good point. You can always go and have a look. You can always be involved. Uh, Generally quite consistent. That's fair enough. Cash flow. How can I answer? Amal, you just type where you typed how can I answer. Less risky, less volatile. Well, that kind of depends on which currencies you're looking at. But it's, it's a huge market. There's lots of options. It's going 24 hours a day from Monday to Friday. The perceived strength or weakness of one region relative to another can be easy to see. There's an immeasurable, unquantifiable amount of variables that the top economists fail to predict with certainty, so we prefer to try not predict the future at all. It's not about trying to predict the future, it's about trading what we see right now. So, that is why the why is the cause and the what is the fact. We trade only on the what. Okay, so we don't care what is creating movement. We don't care what is pushing the price up or down. All that we care about is the price is going up or down. So remember, don't ask why is something happening. Ask what is happening. By the time most people find out why something has started happening, it's too late to get involved. Alright, so let's have an example of this. Alright, so I'm going to explain this graph a little bit more now that we're going to be actually looking at one. So at the top left, you'll see what we're looking at. Okay, so it's the Euro USD dollar, US dollar, sorry. And we can see that it's daily. So that what it means is that each one of these red or green bars is a day's movement in price. Each one represents one day. Red obviously being going down and green going up. Now these colors are just on this graph for simplicity. I'll be showing you how to make your own graphs, where you can get them from, and in fact you can use your own colors whenever you want. Okay, so what it means is that for €1 you will get this amount of US dollar. So if I was to ask you where at the most current point on this graph, being the 27th of January 2016, how many dollars would I get for €1? Okay, it's just simply a matter of reading the graph, but I want you all to be just aware. Exactly, yeah, 1.08869. You don't need to be 100% spot on, but we can see there it's marked in the black box. It's showing the current price. It's at the top of that green bar, because the green bar is the price going up and the top of it is where the price is right now. So 1.08 is the amount of US dollars we would get for €1. And obviously this price can go down, price can go up on a daily basis depending. But just a very, very simple example. Okay, so I think it was it Nige said earlier, they're very liquid. They're mature and developed. You can enter and exit very, very easily because there's a lot of people involved. There's a lot of people trading foreign exchange, so it's very easy to find a counterparty. And information is readily available and widely produced. If I was to ask you how many websites out there publish, the financial trading statistics, the values of currencies against each other. Yeah, Dahlia said millions. Who knows? There are so many websites out there. But what it means is, it's there. If you want to find out, you can find out. The information is readily and easily available. Traders can relate to the trajectory of an instrument based on known economic factors. Sometimes it's just interesting to see the movement of a currency, and because you know what's happening in that country at that time. There's one very, very popular example that I'm sure some of you will know about, some of you might not, that we're going to be looking at the end of the lesson. So just keep that in mind when we get to there, because we're going to be looking at foreign exchange. So traders have their own personal opinions on the state of play, and they trade accordingly. Do you think our personal opinions are going to be changing how we trade? If I was to say to you, oh, I really like dollars. I like what they feel like. They're green, they're fluffy. Saying dollars is cool. I think I'm going to trade more dollars. Is that something we're going to be doing? No. Exactly. No, if you want to trade like that, I would advise you'd be much better off going up to a dartboard and throwing darts at names of companies and hoping for the best. We are not going to be trading off our personal opinions or instincts. We're going to be trading off what we see, intelligent-based strategies. Okay, so also after we've talked about foreign currency, also commodities, energies. So if I was to ask you, what are energies? Okay, well, I want you to be thinking about what they are. Yeah, I'm going to be going through a couple of examples in a second. I can see that you do have some ideas already. Well, they are highly volatile instruments. And why are they highly volatile? Well, for two reasons. One of which is obviously been hugely impactful over the last 10, 15 years. Energies, I shouldn't have said oil, but I think it's kind of obvious where we're going with this. They're often produced in regions of economic and political instability, which, affects the supply hugely, such as North Africa or the Middle East. Also, there's the macroeconomics dictating that the future demand. So, if recovery stalled markets would anticipate less demand, that will affect the pricing as well. We can tell the different political effects, such as the USA, the Middle East, Russia. Obviously, they all have huge effects on the energies. These markets offer excellent opportunities because of these big swings. If you want to make money, you need to see big growth or big falls in a market. Okay, so I already asked you for some of the examples. I think the most obvious one, of course, is oil. We're all aware of that. But, there's plenty of others. Natural gas, there's heating oil, gasoline, so many out there. Solar, there's plenty of others. Any energies you can think of. The facts change and create opportunities for traders as the price adjusts. Again, we don't care if we're trading oil or gas or gasoline or if it's solar, whatever it is, we just care about the opportunities. So, precious metals. There's a strong clue on the right hand side about what I'm going to be talking about. So, what other ones are there that obviously other than gold? Being alright, exactly. Silver is the most obvious second one. But again, there are so many out there. Yeah, Nazim, you got the next one. Platinum, palladium. Now, metals, again, are also volatile as sentiment swings. It depends how people feel about them. Gold is obviously somewhere people consider a safe haven as well. There's absolutely loads. Dana, you asking about wheat. Now, wheat doesn't fall under precious metal, but it does fall under what we call soft commodities. What a great transfer there. How brilliant of you to bring that up and lead me beautifully into this. It's almost as if we had it set up. Now, if I was to say soft commodities, okay, so like energies, they offer some excellent moves because the prices affecting them can change quite rapidly. Okay, so it can be through one of the following factors. What do you think is the biggest factor that can change so quickly for soft commodities? Okay, so coffee obviously being one. We said wheat. And thank you very much, Vidmantis. I hope I'm pronouncing your name correctly. You were the first on the ball. It is weather. Weather can affect the crop. Whether there's a very big crop, a very small crop. What if the crop is destroyed by a storm? This has a huge effect on supply and demand. What else can affect supply and demand? Well, with certain crops, you can have pests. If you have greenfly or locusts destroy the crop, obviously that affects the supply. Global demand based on outlook. What if a country has had a certain drought at a time, or if they haven't had a good harvest that year? Well, then they're going to have a higher demand for certain food types. There could be safety concerns leading to the consumption of a particular commodity. What if a report came out tomorrow that said, wheat is incredibly poisonous. We just didn't realize it was a very slow acting poison. Well, that would obviously have a huge effect on the price of wheat. And other examples of soft commodities, coffee, sugar, cotton. So can anybody tell me, what do all of these things have in common? How would you kind of classify soft commodities? How would you tell your friends when they say, what are soft commodities? Okay, Ahmed, it's not necessarily food, because I don't know what you are into, but I don't eat cotton. My t-shirts stay in the wardrobe. They don't go onto agriculture to agree. Yeah, they grow. Exactly. Thank you, Dina. They come out of the ground. They grow. So they're growable. They're soft commodities. They're grown or manufactured. Okay. Now, obviously one of the most famous ones, whenever someone talks about financial trading, what is the go-to thing you talk about? When you say, I am trading, what do people talk about trading? Stocks. I trade stocks and bonds. I'm on Wall Street. I trade stocks. It's the big one everyone likes to talk about. There's also equities and market indices, obviously. So shares or equities are designed to raise operating capital for the user. So that, remember, since equities are traded on an exchange, they have an opening and a closing time, depending on which exchange they're being traded on. Whether it be in the USA or in Europe or Japan, obviously you have to take the time zone into account. Okay, so it's somewhere where speculators invest in order to gain a return, and market indices are essentially groupings of the top listed equities on a particular exchange, market region, and the average value or similar is the relevant price. So when I say indices, it's where you see a collection. Okay, so it's like the Fortune 500 or those. I'm sure there's far too many examples. There's the ones in Germany and Japan and America and Great Britain. They're the collections and then the average pricing of those. Examples being the SP 500, the FTSE 100 in the UK, the ASX 200 in Australia, the Nikkei 225 in Japan. Eunice saying the Dow, exactly. Tassie, you guys know lots of examples. NASDAQ, exactly. And then also we have bonds. Now, bonds are where the government have borrowing requirements as well. And in order to run their affairs, they need money. So obviously some governments do this better than others. How do the governments raise bonds? Well, unlike a company, they don't sell shares. They go to the marketplace and they seek funding for fixed periods, anywhere from 1 to 10 years, depending. And then the marketplace dictates the price given the economic outlook for that particular government. So if it's a very, very stable government, well then obviously people are going to be more inclined to give them money. If it's an unstable government, say political turmoil or natural disasters in the region, well then that's obviously going to have a little bit of an effect and less people will want to invest. But if less people want to invest, it means there's probably going to be better returns on it. So when there's greater risk associated with a region, that region becomes higher as investors demand a greater yield to justify taking that risk. Obviously, if you're going to be, take on more risk, you want greater reward. So you can trade bonds via contracts for differences as well. So with so many choices, we talked about Forex, commodities, market indices, equities, bonds. So what do you choose to trade? Okay, most sophisticated investors have diversified portfolios that trade a combination of assets. And what's important about this is when you do it correctly, it helps you ease variance. Now, when you think of large, successful investment houses, do you think they focus on having just one thing that they invest in? We invest only in metals. Or somebody else says, well, we invest only in tech companies. That's the only thing I do. Well, no. Very large, successful funds, they wouldn't trade only one instrument. So we're going to help you decide what type of trader you want to be. All right. In order to do this, you first have to find out which your options are and help you to explore. So our bias, obviously, is technical trading with as low risk as possible. So if we're interested in technical trading with low risk, do you think we care what we're trading? Do you think I would say to you, well, only trade gold? I love gold. It's pretty, it's nice, we're only going to trade gold. No, of course not. Now, can I also ask you, have you ever met someone who told you that they were a trader, but they said a certain type of trader? Somebody said, oh, I'm a trader, but I just do tech. Or I'm a metals trader. Or I'm an equities trader. Okay, some people haven't. That's because most of them don't last very long. All right. So somebody who starts off that way probably isn't going to be doing it for a very long time. And if you have met one, well, then maybe, hopefully they diversify. Otherwise, they won't be trading that for very long. Because if you're only looking at one market, say I was only to look at the gold market every day, and I'm just waiting for an opportunity to appear. Well, how often does a good opportunity come along on just one market? Now, what happens if I'm looking at 1,000 different markets in front of me? What are the chances that I spot an opportunity within the next day? Well, yeah, I'll probably find one a lot faster if I'm looking at multiple markets rather than just looking at one. So, we've decided we want a diverse portfolio with as little risk as possible. Now, who makes up the market? Now, we have to realize when we're getting involved with the market, everybody else involved, these are the people we're competing with. You know, we're getting involved with these other traders. So there's large financial institutions. Now, again, we're looking for clear, consistent growth. We're not looking for big wins or to be cocky. So why would you take them on? There's organizations who need to use the markets to acquire items of offset risk. There's speculators. Okay, so we're going to be looking at the different types of traders, why they trade, and what we can do to trade, you know, with them, against them, the different types of trading we can do. So there are going to be three main styles that we're going to be exploring. So there's fundamental analysis. So this is where, again, you analyze things fundamentally. You can see why they named it so cleverly. So it's where you're reading the newspapers, you're trying to find out about a company, say maybe you were reading about Apple and you find out that they're launching an iPhone next year, so you'd start speculating that the price will go up then, if you heard that the phone had this cool new feature. So that's fundamental analysis, where you're reading lots of reports and ideas and finding out about the companies and the instruments involved, finding out as much as you can about them to try predict the future. You then have technical analysis. This is where you're actually analyzing, what's happening. We're looking at bar charts. We're looking at the markets. We're looking at these candlesticks going up and down. We're looking for trends. We're trying to find that. And then there's counter retail techniques. This is where you have your retail traders out there. This is where you spot them. It's easy to predict what they're doing, and you counter trade to them. So you take the opposite of when you know they've made a mistake. Now, it's very, very important to understand how others trade for you to be consistent, because you need to understand what's going on. Alright, I hope you've all read Sun Tzu's Art of War. You need to understand your enemy before you can defeat your enemy. Okay, so a quick poll, right? We're going to examine a chart and make a decision. Right? Now this is something I'm going to be doing over every lesson, right? Now this is just going to be a very, very quick look. Today's chart is oil. Now what I'm going to be doing in future lessons is we're going to be posting these examples and this class interaction. I'm going to be posting it on Twitter and Facebook. We're going to be sharing it and talking about it. But just for tonight, we're just going to do it here in the class. Okay, so I want you to have a look at the charts. Don't answer straight away. Let's have a bit of a look. Let's have a little bit of a think about it, okay? We don't have to decide straight away. We can have a little bit of a look, okay? So it's crude oil. It's a daily chart, okay? We can see it's from October last year up until January this year. Right? We can see here that there was a bit of a ceiling and a bit of a floor that it kind of just bounced in and out of a little bit. And then it started to fall. But within that fall, we also saw a ceiling and a floor that it stayed within. Now it appears to have taken a bit of a turn, again with a ceiling and a floor that we can see. So it's gone up and down within the first blue range, then it changed, and then we had a red range where it went up and down, and now we have a blue range where it seems to be going up and down. Okay, so where would you go here? Would you go long, short, or would you decide on something else? Okay, Jumana, maybe by reading their financial reports. So Jumana, you want to do some fundamental analysis. That is what you would decide to do here. I would say no, I wouldn't agree. Now you could, it's something you could do. Now whether you go long or short, again, I would do neither. That's why I wrote other up there. this has shown that it can stay consistently within run range, but then it can change. It can go down. And then it can change again. It can go up. Who's to say it won't go down again tomorrow? Is there any evidence here that says to you 100% this will not go down? Does anybody have any evidence at all? Even just a tiny bit of evidence? Okay, no, we don't. Even though we can see here that the last candlestick is in fact red. The price was going down. So there's no reason to go short on this for definite. Now, do we have any evidence that this is definitely going to go up? Can we see any evidence here that this price is definitely going to go up? Well, no, we don't have any evidence of that either. So why would we go long or short on this? We have no evidence. So let us wait and see. Let us wait for confirmation. That is something that I want you guys to be aware of. Wait that term. Wait for confirmation. Okay? This is something I'm going to be talking about in later lessons. We're going to be analyzing a lot. Now, this was just a very simple, quick exercise. I didn't expect anyone to get the answer there. Don't worry. What I mainly wanted you to see is this is the type of example we're going to be working with on future lessons once you guys have had a far, far better understanding. Don't worry. And we're going to be talking about these lessons. We're going to be doing it on Facebook, Twitter. We're going to be interacting. They're going to be interesting examples. We're actually going to be talking with each other. It won't just be one direction, me talking with you. It'll be you talking to me, talking back, asking questions. We're all going to get to know each other. We're going to be talking to each other in the comment sections, through tweets, everything. I'm going to give you the Twitter handles for the guys on the team so we can all discuss these things. It's because through interaction and discussion, we will learn the best. Okay, so to summarize, okay, so congratulations. You have just completed lesson 1. So you have laid the foundation of your foundation. In Ireland, we have a saying that says, "Tus ma la nahibra," which is Irish for "a good start is half the battle." Well, I would say to you, you have a good start down. So now we can start building on analysis and how to find opportunities. So remember, attend all of the lessons live. Ask as many questions as you can in real time, and I'll also show you how to ask questions afterwards should you forget to ask something during that. And remember, we are here for you to contact us anytime. So the next steps: try to attend all of the sessions live and your knowledge will grow. Shaw Education Group lifetime membership prize during the 8th lesson, so don't forget that you want to be on over 50% of the live lessons to ensure you attend that. The next session is called the Mechanics of Trading. This will be an on-demand lesson added to your student areas. That one won't be live. Okay, recordings are made available within 24 hours, so don't forget to go to the academyft.com website, lock in and review them there. And like I said, don't forget about the draw. So what I'm going to do now is I'm going to grab a quick drink of water since I have just been shouting for about an hour non-stop. The recording of this lesson will be in the student area within 24 hours. I'm going to grab a quick drink of water and then I'm going to come back. We're going to do our live bonus Q&A. For anybody who has to head off now, that is absolutely no problem. Thank you very much for your attendance and your attention. You can come back and review the Q&A in your student area because that will be on the recording. And for everybody else, I'll be back in about 30 seconds to a minute and we'll continue with the Q&A. And I am back. And the first thing I'd like to say when I'm back is I just said that your next lesson was pre-recorded. That is not true. The next lesson is lesson 2, which is live. It's lesson 3 is the pre-recorded one. Sorry. So forget I said that. Okay, so let's see these questions. All right. Is it just an hour? Amal, yes, your lessons are each an hour long with, like I said, a 10 to 15 minute Q&A at the end of each one. Lilas, can you explain again the last chart about oil? What confirmation should we wait for? Lilas, I didn't explain what confirmation is yet. I just said that that is something that we're going to be waiting for. Remember, I asked you, do you have any evidence of the movement? Well, what we're going to be looking for in future is evidence. So you will be seeing it. Nadia, what is my Twitter account? Don't worry about that just yet. I will be showing you my Twitter account on lesson 2 as we are going to be starting to interact on it. So we will talk then, don't worry. There is absolutely no rush. Let me see. How is my attendance confirmed? Modi, it's just, the magic of computers. They know who is here and they know how to come on. Is counter retail techniques hedge training? Katharina, we'll be getting more in depth into that. It's not the exact, I'll be showing you what the same is and what's different about it and what exactly it is. Don't worry, we'll be developing this strategy over the 10 lessons. What do I think about eToro? Eunice, I'm not going to comment on kind of like apps or other programs like that. What I would say to you is we're going to teach you strategies and how to do things for yourself, whereas eToro it's founded a lot more on just copying other people's techniques. I would just say we're going to build our own techniques. We're going to become our own successful traders, because with things like eToro, where you're copying somebody else's techniques, you are that little bit behind. You're following them. You can only act after they've acted, and sometimes that little pause in action is just too long. Are we going to have a test or quiz? Lubna, yeah. So what will happen is you'll have assignments throughout the course for you to practice. There will be 4 practice assignments just for you to practice and warm up. And then at the very end, after lesson 10, there will be the final exam. Do you have a live trading room where people can join and follow? We're going to show you what we use. But don't worry about that. Again, that's only lesson 1. You don't want to be getting involved in trading just yet. Let's build a foundation first, and then we'll show you. Will we have mock trading sessions? Saket? Yep, down the line, we're going to be showing you all of that. Should we know all of the terms of trading? Nope, I expect you to know none of them. I'm going to explain any term I use. I'm going to show you the definition of anything I say. We're going to be teaching you all the terms. Is that lesson 1? That was lesson 1, yes. Day trading. Okay, Paul, sorry, I didn't explain what day trading is. Again, I'll get into that, okay? So it's basically, it is what it sounds like, trading day to day. But I'll get into that far more in depth and explain that. How will I reply later when you're watching the replay? I will not be replying to anybody watching the replay. You don't have to, Hasina, you don't have to type in the question 15 times. It's okay, right? Because if you do keep typing in the same thing over and over again, the program is going to think you're spamming, and then it's just going to block all questions you type. So try not to copy and paste the same thing 15 times. If you're watching the recording, clearly I won't be able to answer questions on that. But for any questions that you have during the recording or that you would like to ask outside of the lesson, or during the recording, or you just forgot to answer right now, well then you can email support@academyft.com and one of us will get in reply with you straight away. Noreldian, you are asking a very complicated technical question. How about you email in and we have a bit of a discussion of that. Now there is risk in obviously every market, so what we're going to be looking at is how to mitigate and analyze that risk going forward and using strategies to get around them. Mohammed, yes, I can see your questions. Guys, I can see all your questions. You just have to realize there's a lot of people here asking a lot of questions. Just because you type it in and hit enter, I can't answer it absolutely straight away. Deirdre, I am not on Facebook or Twitter. Which would be best to create now to be able to communicate with yourselves as is going to be needed? Now, I will say to you, the Facebook or Twitter interaction is not compulsory. It has no effect on your final grade. It's not definitely needed. If you are going to set one up just to interact with us, brilliant. I would say to you, Twitter is the simpler, easier one to use. It's very simple. It's very easy. It doesn't take a lot of effort. So if you don't want to spend too much time or hassle on it, go for Twitter. But have a look at Facebook, see which one suits you the best. I'm struggling to log in with my email. What can I do? Send us an email at supportacademy.ft.com. Tell us your email address that you signed up with, and we'll help you with your email. Will you be providing notes for the lessons? Yes, we will. How do we know this is not recorded? We tell you which lessons are recorded, and we tell you which lessons are live. It would seem kind of weird to lie about that. It's completely unnecessary, so we do just tell you. For a beginner trader, how much should I spend buying a share? Very loaded question. I would say straight away, for a beginner trader, come right back. Don't be looking on how much to spend on a share right now. Be looking at, how do I build my knowledge? How do I come up with a strategy? How do I understand the markets? When you have all of those, then we'll start looking at, well, how do I mitigate risk? Well, how do I mitigate risk? Well, how much money do I have? How much money, what is my budget? What type of strategies am I going to be implementing? Where am I going to spend? And then when you have all of those factors and all of those things, that will tell you exactly how much you should spend on what transaction. I can't record these lessons. Muhi, there's no need for you to record them. We record them for you and upload them to your student area. Helaz, I'm sorry if I'm pronouncing your name incorrectly. Is there any homework I need you to do? No, I'm not really going to give homework. I'm going to give, suggested reading and materials for you to look up, and we're going to have class interaction. But your homework is to simply, take in what you learned tonight. If you need to go back and watch the recording, please do. Make sure you just got the terms in, got everything sunk in. And if there's anything you're stuck on, you didn't understand, email us at supportacademyft.com and we'll go through it. You don't think it basically depends on luck? Khaled, I will tell you one thing straight away. I don't believe in luck. I believe that luck is opportunity meeting preparation. If you have a lot of preparation and you see an opportunity coming and then you grab it, a lot of people will say you got lucky. I'll say I didn't get lucky. I put myself in the position to get lucky. Somebody who has absolutely zero preparation and never sees opportunities coming and doesn't look for them, well, they're not going to get lucky, inverted commas, very often. So there is luck, but we make our own luck. Is there any major difference between Forex and other trading ways? Well, Forex is, the markets don't close during the week, Monday to Friday. So that is one big difference, probably the biggest difference. But, like we said earlier, everything you trade is the same because people are trading. They're all similar. So we're going to be looking for it. How do I get the course notes? We're going to be explaining all of that later. Don't worry. We'll be uploading the course notes to your student area. We'll be emailing them out when it's required. So don't worry. Is it online now live? Rana, yeah, this is live and online. You can, the recording will be in your student area and I'll still be saying this is online live in the recording, but we'll have pointed out that it's a recording. So don't worry. Is there a quiz? I said that already. Yep. If I pass this course, will I receive a diploma? Yep, you get a diploma on completion of the course. Are there grades? Yes, there are. Is the final exam hard? Dina, that depends on how much you prepare for it. If you watch none of the lessons and do no work, then I would say it's incredibly hard. If you watch all 10 lessons, interact, talk to us, email us, make sure you understand everything, I would say it's quite easy. Would you be teaching position sizing and basic risk management, managing trade books? Well, risk management, there's an entire lesson on it. It is one of the biggest things we will be talking about. So yes, we will be getting into that. I didn't really understand bonds. Non-halanahala. Sorry, I definitely did not pronounce that correctly. So bonds are, the government issue. It's basically the government raising funds. The government needs money. So they issue government bonds. You go to the government and you say, I want a 10-year bond. You give them a certain amount of money and they give you a small percentage of that money back every year that you hold that bond. You can then sell that bond on to someone else, or you can just try and make the money off it. It's basically a way for governments to make money, and it's just something that people trade, on CFD markets. So that's basically what bonds are. When will the final exam be held? Not until after lesson 10, and you will have 12 days to complete it when it does come out. So don't worry about that. Focus right now on just getting the basics out of the way. What is the name of the talker who give this course? My name is Sean Fitzgerald. It is on the bottom of most of the slides and at the start of the lesson, but you don't need to worry about that too much. I'll be saying my name plenty. Is this course about trading in US markets, or does it apply to Indian markets as well? Harshit, it is about worldwide markets. We're not going to be focusing on any particular